Again, we see the individuals in the inland market, especially in the third tier, even fourth tier cities, and they're buying the cars. And this demand is ready and tangible, and this will be the major driving force for 2010's China market continue to grow, which will still make China #1 market in the world. Yeah.
Okay, in the last 5 months of the past 5 months, sales have jumped more than 70% in each one of those months of car sales, and they're up about 50% or passenger car sales for the year through November. A lot of people say this is due in part to the stimulus package, some tax breaks there, but also a lot of loan growth. Is that what was driving the market this year, and can it be sustained next year?
Well, first of all, I think we need to evaluate this policy properly. Policy is very important, but we believe policy is just a trigger. First of all, you have this demand ready, and then you have this consumption confidence problem at the end of 2008 because of the economy slowdown and financial crisis. So that's why people this negative impact psychologically. While this policy coming early this year would help people to restore their consumption confidence, and then this pent-up demand start to release, and that's why we see a very quick growth this year, especially second half of the year. If you compare with last year, because the base last year was very small, so that's why this year you show a 70 or even 80% growth month on month. For next year, we believe, if only the economy continue to grow, and the monetary policy still, as I mentioned, moderately open, and we believe the market will continue to grow regardless this policy modification.
Let's look at the business of the car makers here. I understand that advanced research in Japan estimates that vehicle makers make about $1,000 to $3,000 US in profit on each sale, compared to $10,000 in the US. Why such a large disparity, and can that be raised in the coming year?
Well, that's a good question, because China is a really new market. The competition actually has not really reached the level of U.S. market, especially in the price field. If we're talking about the price level, especially the mid-higher end vehicles, the passenger cars, China's price is still much higher than that in the U.S. market. Well, but you see the progress because, as I mentioned, that's only mid-higher end. Mid-lower end, China's market price now actually is pretty competitive. Some of them actually even the lowest in the world so far already. So it's different so far.
We've got companies including Ford, Hyundai, BMW, Toyota, all planning to expand or already expanding there. Is there a danger of overcapacity if the sales growth doesn't keep up, and may that lead to exports eventually?
Good question. Actually, many people start to worry about overcapacity, but actually, if you look at top 10 car makers in China, they are actually really forced by the reality to expand their capacity because they already got a bottleneck this year to provide vehicles to customers. If they do not expand, they cannot capture the market share. Well, for the next several years, we see average growth, the compound annual growth rate can maintain at least 10 to 15%, which will mean in the next 5 years, China will still grow nearly 4 million passenger cars. For this incremental volume, of course, everyone try to get their own market share. Well, yes, if maybe in the future, there 1 or 2 years, the market will slow down, and then some of them will suffer. But from a mid-long-term view, you just have to keep expanding your capacity in China.